Hello and welcome to the Weekend Investing Daily Bites. We're shooting this episode on 22nd of June. And like we mentioned in the last many episodes, the market is playing uh, a bit difficult to predict on a day-to-day basis because it is remaining to be near all-time highs, yet not really going across that boundary and going for that long drive above that. So it's very choppy in the last 5 or 6 sessions. You can see the Nifty here, one day up, one day down. Extremely choppy behavior near this important milestone, but really speaking, nothing lost in terms of few days of down or up in this context. And when we see the Nifty heat map, I mean, you can see the reason why the choppiness is there. We had profit taking across the board. So whether it was energy stocks, oil stocks, FMCG, banking and finance, still I would think that did not give up so much. IT was down, steel was down, cement was down, power stocks were down. Um, Even some of the recently running autos were down, like Tata Motors and Aisha Motors. So essentially, profit taking again, getting nervous at these new highs. Also, the monsoon report seems to be playing out a bit in the minds of the market men. There have been reports that monsoon is going to be a bit short as of now, and that also could be causing people to book some profits in case that story becomes the major narrative going forward. Nevertheless, we've had good runs since end of March, and after a couple of months of maybe almost 10 weeks of a good run, some correction and slowdown can be expected. But somehow the underlying theme still seems very strong, even globally, despite poor numbers and recessionary calls in the US. Even the US market is not really going down, and the the buoyancy in the market, especially in the tech market, is quite obvious in that context. Uh, Today's market, we saw PSU banks giving up the most, minus 1.7%. Public sector enterprise stocks also giving up 1.1%. Energy stocks down 1%. Real estate, commodity, IT, FMCG, consumption stocks, infra stocks, pharma, auto, private banking, and bank nifty all were down 0.8 to 0.3% negative. Metals managed to stay flat at 0.1%. So this week, as you can see here, extremely choppy week across sectors. Only pharma and PSU banks have eked out a 1.5% gain. Over last 3 months, of course, every sector has done well. So markets are always a mixed bag. We haven't really gone into any intermediate downtrend. So if in case you were getting a bit anxious about the market, I mean, this is not even started yet. So uh, it always happens that when you are in a uptrend or a downtrend, you tend to, when you see every day your portfolio going up and every day green on the screen, you tend to forget that the red is equally a part of the part and parcel of this game. So if you get too many reds, you forget that there could be green, and if there are too many greens, you often forget that there could be reds, and you will get both of them from time to time, and that is the nature of this game. The main culprit today was mid caps. Yesterday we had a great gap up in mid caps, and it sustained that gap yesterday. Today the index collapsed on itself and closed that gap also. So again, it is not even closed on a 2 day low basis, so nothing lost really. It is just a periodic correction like we've had several in the past. Small caps had a more deeper correction where it lost more than 3 days of the last 3 days of gain. Uh, Again, given the context what we've had since end of April, coming back to at least a 20 DMA or even lower is not ruled out for small cap index at this point. So overall, I think nothing to worry about. Some people are booking profits, yes. The overall outlook in terms of the markets remains buoyant. Small caps are at all-time highs. Mid caps were at least till yesterday making new all-time highs. Nifty is at near all-time high. Bank Nifty is at near all-time high. So at all-time highs, I'm not worried actually. It's only after the market start to come off, 10-15% from the top that begins a area where things could go bad from there or things may bounce back to all time high. So that 10, 15, 20% drop is where the crucial, that decision comes from the market, that whether it's going further down or whether it's going to bounce up from here. So if this comes down, small caps come down to, maybe 10,000 also, that is fine because we've left 8,500 to 10,600. So 2,000 point rally. On a 2,000 point rally, even if you give up, let's say 30%, 33% retracement, so maybe 650 points. So again, a near 10,000 is where I would think, if it comes, would be a great place to for the market to turn again. Nifty Bank is stuck in this range. So Nifty Bank actually did not break even yesterday's low on close, and it's been stuck in this box since mid of May, uh, and this remains to be seen which way it will break out. If it breaks down from here, then I think another 1,000 points will go very very easily. But again, after some consolidation, it might as well rally up. We don't know. Stock of the day is Scient Limited. So I think you can also zoom in to your screens and see this chart on a more zoomed out basis if you want. Zoomed in basis, I'm sorry. So this stock was at 200 rupees middle of 2020, and it is now nearly 1,500. It had one run from 200 to 1,300 in 1 year, or just over 1 year, going from May 2020 to October 21. So it had one fantastic leg up there, and then it almost halved from there, 1,300 to nearly 700, and then from 700 it has again doubled from 1494. So most strategies, most people will not be able to hold this kind of a drop unless they have full conviction about the stock and the story, and then they're willing to stay in regardless of what happens. If it drops tomorrow 80%, they will still be in. But what I'm trying to say here is that if you had a strategy that would uh, at least try to capture some part of the gain. Maybe you could have gotten it at 400, maybe gotten out at maybe around 1,000, then maybe gotten in again at about 900 or 1,000 and sitting in the stock right now. That would be sort of the no pain ideal way of playing this stock. Of course, in hindsight, we can say that we should have bought at 200 and we would have been sitting at a seven bagger. But life is not so easy, and hindsight is always 2020. So we need to see what is a practical way of how to pick stocks, and how to hold them, and how to not have the pain of your portfolio. At least my biggest emphasis in momentum investing and at weekend investing is not to have a strategy or a portfolio which is going to ruin my sleep, not to have any strategy which will keep me guessing in the dark, or which will bring me to my knees every day and I have to pray that please God, please take this stock up. That should not be happening. You have a set way of selecting stocks, you have a set way of exiting stocks. At every point of time you need to know what to buy, when to buy, how much to buy and when to sell. All this has to be crystal clear in terms of how you are approaching the market. You are approaching with a set allocation. You know when is your entry, you know when is your exit, and you know when to set out, when to re-enter, and so on and so forth. So this is something that I wanted to convey to you in this video. If you have any quick questions, let me know. I'll be happy to take them. I have 3 or 4 minutes left on this. So just type in your questions if you have, and I will be happy to answer them. While I wait for these questions, please do subscribe to this channel. We have a another interesting content video that will come out later in the day. So we do two videos on a daily basis. One is this market update, and another one which comes out on the YouTube channel is the weekend investing special content. This is something that we do for disseminating general market knowledge and information about various things. So today's other episode is going to be about investing in gold. So please make it a point to go to our YouTube channel, subscribe it, and click the bell icon there to get the notifications. Let me just quickly go see if I have any questions now. 1 second. Okay. So let me bring my chart screen up here. Let me remove any averages. Okay, first question is, how is Renuka sugar looking from Tabriz Taj Mahal in short term and long term? So I think sugar has really done well today. There was a news item from the government that they are doing some interest subvention waiver till September 30th, and that is going to help all the sugar companies fulfill their ethanol commitments. So all the sugar pack, and let me just show you on the screen here. I have a sugar uh, column here. You can see the kind of run these companies had today. So Uttam Sugar up 11%, Dhampur Sugar 7.9%, Dalmia Sugar, Awadh Sugar all up in a big way. Renuka Sugar, while it has languished here, but I think it has a very, very important support at around 40 rupees, and it is looking good to me right now. I think you can go long with a couple of rupees of stop loss, maybe at 41 or something, and go long here. And I'm hoping that it will recover back to its previous highs, because commodities, in my view, is the flavor for this decade. And while it has rested for some time, I think the the uh, the commodity run will resume again. State Bank of India, we talked about it yesterday only. So again, very near its support here at 562. So above, I would think 570. You can start to take a call on this for a 594 kind of a run in the very short term. But below 560, 562, I would not remain invested in this stock. And these are all short term trading ideas that I'm sharing with you. I'm not asking you to stay long term in them without a proper thesis on it. Uh, Another question is on ATGL from Shikha Gulati. So ATGL, let me put up the chart. I don't think the charts are so, favorable. So again, the stock has collapsed from 4,000 to 655, and it really needs to rebuild any setup or cross 1,000 rupees of resistance to really start going up. I think it's a long way before a positive outcome can be expected here. So I would not recommend to buy the stock right now. If you're holding it, maybe uh, not allow a new low to happen. So maybe below 630 or whatever is this low here, you could potentially get out of the stock. Ram Ratan Wires is the next question from Paras Gulati. Ram Ratan. I'll have one more query about the stocks, and then we'll wrap it up for the day. It's a fantastic looking chart. Nothing wrong here. I think if you're playing it for the very short term, you can keep a trailing stop at 270. But I think a really strong, good looking chart here that needs no worry as of now. Last question, MRPL. Marpuri Suresh is asking this question. MRPL is uh, a good rally in the last few days from 64 to 76. I would hold this and maybe even uh, add it on dips unless it starts to break, let's say below 68 rupees of level, the congestion zone that it broke out here. I think this is a breakout level, and you could buy on dips as well, but below 68, I would not want to hold it anymore. So this is still viable in my view. Yeah. Last one, Shweta, Piramal Enterprise. Let me just quickly open the chart. Great gap up in the last few sessions. Usually, when gaps happen near long-term down moves, they are usually very, very decisive. So, I think let I think 900 odd be your sort of supporting and try to buy on dips and wait for higher ground. If 900 breaks and this gap starts to fill, then I think it's lost its steam and it might come back and close the entire gap. So this is what my thought on a trade for this is. For long term investing, I'm probably not the right guy to give you any guidance on this. So thank you so much for your questions. I hope some of them got answered. For those who did not get answered, I'm sorry, and we'll try to take it up in the next session. Thank you. Bye bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.